Electric vehicles are the trend right now. More and more automakers are going on to make more EVs with the hope of upscaling their sales. But as much as it might seem like this is the case, it's the complete opposite. EV sales have gone down drastically, leaving only the giants at the top. There are a number of reasons for this, but it all boils down to the fact that other automakers that have not specialized in EVs are selling them at a higher price than expected. This is because they're trying to get into a market that they're not used to. But because of the drop in sales, Ford and GM have decided to dismantle their entire EV strategy. But what is the real reason behind this? Let's find out, shall we? Hello everyone, and welcome back to our channel. Today, we will look at the reason behind Ford and GM dismantling their entire EV strategy. But before we continue, make sure you leave a like and subscribe to our channel for more amazing updates on your favorite cars. And with that, let's find out the reason why Ford and GM are dismantling their entire EV strategy. When Ford was starting out in 1913, Henry Ford's moving assembly line transformed car manufacturing. Ford came up with a groundbreaking innovation that drastically reduced the time it took to assemble a car. Because of the strategy, they were able to mass-produce cars while slashing vehicle prices. It goes without saying that this definitely puts the rising automaker at the top. More than a century later, car manufacturing is undergoing yet another seismic shift. However, unlike in 1913, this time Ford Motor Company is scrambling to catch up rather than leading the charge. We're at a point where electric vehicles represent a fundamental shift in technologies and manufacturing processes. It is these processes that have turned Ford and rivals such as Toyota and Volkswagen into the biggest car companies on the planet. As much as the established automakers are racing to adapt at an enormous financial cost, they're still miles behind some of the top EV sellers, like Tesla, and a crop of new Chinese competitors, including BYD and XPeng. What the world needs is not just EVs, but affordable ones as well. This is especially because these EVs will play a big role in helping countries cut planet heating pollution, which basically means a cleaner environment. But established automakers, such as Ford and GM, are really struggling to get to the point where EVs are profitable. But now, with governments already planning on banning or limiting the sale of new gas and diesel engines, will these automakers in Europe and the United States manage to deliver them? This is the big question. Gene Munster, a managing partner at Deepwater Asset Management, said, "Ultimately, some of these car companies that have been the cornerstone of how we've thought about cars for the last 100 years will be a fraction of their size in the future." There's a huge gap between legacy car makers and newer rivals. Looking back at 2022, Tesla managed to deliver about 1.31 million battery EVs. In addition, BYD managed to triple their sales from the previous year to reach more than 900,000. And when you include plug-in hybrid vehicles, this figure goes up to about 1.86 million. In the spirit of comparison, the Volkswagen Group, including Audi and Porsche, managed to sell 572,100 battery electric vehicles, while Stellantis, which makes Chrysler and Jeep, came in at 288,000. You can imagine that Toyota, Ford, and General Motors are even further behind than that. As much as new entrants have the jump when it comes to technology, the rising Chinese brands boast lower production costs, which allows them to charge lower prices. As a result, they have a huge advantage, given that affordability is a major barrier to widespread EV adoption. Considering the EV race that is reshaping the global auto industry, China is well ahead of the competition. On the other hand, Japan, South Korea, Europe, and the US, which have been dominant players for decades, are all lagging behind. According to statistics from the IEA, between 2015 and 2022, the world's largest car makers, among them Volkswagen, General Motors, Toyota, Stellantis, Honda, Ford, and Mercedes-Benz, among others, saw their share of electric car sales worldwide slip from more than 55% to 40%. During this same period, the combined market share of just two companies, which are Tesla and BYD, went up from 20% to more than 30%. As per the forecasts from investment banks, by 2030, Chinese automakers could see their share of the global EV market double from 17% to 33%, with European firms suffering the biggest loss of market share. To keep up with the EV automakers, established automakers such as Ford and GM have to spend hundreds of billions of dollars and set ambitious targets for EV sales to narrow the commanding lead held by Tesla and Chinese rivals. In an attempt to expand their EV lineup, these automakers announced more than $650 billion worth of investments through 2030. all dedicated to EV production. However, they're now rethinking their decisions as they reevaluate their plans. These multi-billion-dollar spending plans also came at a terrible time for the industry, which was already facing the struggle of the shortage of semiconductors and supply chain. Car sales overall remain well below pre-pandemic levels, and profit margins on EVs among established players are slim to non-existent. Ford and GM are also facing doubts over whether consumer demand will actually rise in line with new supply. Other automakers, such as Volkswagen, have resolved to suspend production of some EV models in Germany due to weaker demand. Munster of Deepwater Asset Management posted on X saying that traditional automakers are in the red when it comes to electrification, and they will continue to be in the red. Sadly enough, Ford and GM are in this category. As of July last year, Ford had raised its forecast for losses in its EV business for the current financial year to $4.5 billion. This was from an earlier forecast of $3 billion. To make sure that they don't count too many losses, Ford pushed back its target to produce 600,000 EVs a year. Given that demand for EVs is now lower than ever as people prefer to use normal gasoline engines, GM, along with Ford, has decided to slow down its EV plans. This has also been affected by the heating up of competition and the drop in prices. Late last year, GM released a statement claiming that they would delay the production start of electric trucks, including the much-anticipated Chevy Silverado EV and GMC Sierra EV. The production of these trucks was moved from 2024 to late 2025 at its Orion assembly plant in Michigan. Mary Barra, the CEO of GM, said, "We're also taking immediate steps to enhance the profitability of our EV portfolio and adjust to slowing near-term growth. These steps include moderating the pace of our EV acceleration in 2024 and 2025. According to Barra, GM is delaying the launch of several EV models to cut down on expenses. For example, the Chevrolet Bolt EV is being relaunched using lower-cost lithium-ion batteries coming from China. This move would allow GM to go to market about 2 years faster compared to if they were making the batteries themselves. In addition to this, the company also expects the Cadillac Lyriq, the Chevrolet Blazer EV, the Chevrolet Silverado EV, and the GMC Hummer EV to comprise 2/3 of its EV production in Q4. Furthermore, GM will also delay the production of the Chevrolet Equinox EV, the Silverado EV RST, and the GMC Sierra EV Denali by a few months so that the automaker can have more time to develop software for them. As much as they may have wanted to adapt to the EV industry by now, Ford and GM have had to struggle. And among these struggles, they have counted some hefty losses. Their EVs are not selling as you would expect, which means that they're just lying there in most dealerships. As a result, dealerships have also refused to take in more EVs, which means that they're now sitting in factory outlets. The race to make EVs is clearly not that easy, especially when companies like Tesla and BYD are dominating this field. After all, these two companies were built just for that. Therefore, Ford and GM will have to come up with a new strategy to make millions from their EVs. But do you think there's any other reason for Ford and GM to dismantle their EV strategy? Feel free to share your thoughts in the comments below. And before you go, make sure you leave a like and subscribe to our channel for more amazing updates on your favorite cars. Thanks for watching, and I'll see you in the next one.